afternoon, everybody. Hey, how you doing? I ain't seen y'all since what was it, like Monday? What was it, like Monday last time I did a live stream? It's been a minute. How y'all doing, man? How you feeling? I'm feeling fine, if I must say so myself. Can't say so for the rest of my family. Well, my sweetie, she alright, but my boys, they been battling sickness. Christopher was sick, then he got better, then Timothy got sick, then he started feeling okay, then he's still down, and now Chris is relapsing and he's sick again, and she's been sick, 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 sick. I was the only one that went to worship service today because everybody is under the weather. But that ain't why y'all pulled up. Y'all ain't pulled up to hear me talk about that. Y'all pulled up to hear me talk about, drum roll please, I put the link in the chat if anybody would like to pull up and share anything or pull up and ask any questions. Feel free. The link is in the chat. Give me a second and I may go pin it to the top of the chat in the tube. But we are talking about, do trading live streams help or hurt? I'm going to go out on a limb right now and tell you. Is this on? You need to stop watching trader live streams because they are hindering you. Let me back it up. If you want to be a successful, especially if you want to be a successful day trader, but if you want to be a successful trader at all, you need to stop watching trader live streams. They are hindering you. Now, if you're just a lazy bum and you just want to copy someone, have at it. Watch all the trading live streams you want and copy to your heart's content. But if you want to be a successful trader, especially a day trader, please stop watching the trader live streams. Now, I have no ill will with any of these people. All of these people on here, Dodgy, Casper, Official Lens, Patrick Wheeling, Kimmel. I see Michael don't do live stream trading, but ICT, I have no ill will with any people. Dodgy, Fire Young Trader, Young Man, Fire Casper, great trader, Lens, great trader, Kimmel, Patrick. I have no ill will with any of these people. But Patrick, I know Patrick live streams all the time. Dodgy live stream. Casper used to live stream a lot. Kimmel live streams. Lynn, she used to live stream for free, but now you can only watch her live streams in her paid membership stuff. But if you're watching live streamers, please stop. That's not going to make you better. It's hindering you. Now, y'all know I'm not the type of person who says stop doing something without a solution. I have the solution for you. But before we get into the solution, I forgot to say what's up to the gang. So let me go over to the chat and see who's up in here. Speaking of gang, before we go to the chat, I pulled this up. I can't remember where we left off, right? I think Kim and Rod Wells have crossed the threshold. If I'm not mistaken, I think Kim and Rod Wells have crossed the threshold. All January, y'all already know we celebrating one year. Get your finger right, Tim. 1 year for the gang. It was supposed to be January 1st, 2024. But some people, ain't gonna call no names, Lil Hawk, Here to Learn Share, Run the Green, Cool It. I ain't calling no names, but some people found the link in old videos that I was putting it on, preparing to announce the Spider Gang on January 1st, 2023. They found the link in old videos on December 28th and signed up. I ain't calling no names, Lil Hawk, Here to Learn, Share, Run the Green, Cool It. I ain't calling y'all name, right? But I think Kim and Rodwell have crossed the threshold. Kim and Rodwell have crossed the threshold right there. If I am, because the last one I remember was Candlesticks. So welcome Kim and Rodwell to crossing the threshold, getting the orange spider with the star. We got some more people coming up very close. I already know these people gonna cross over in January too. I already know a bunch more people gonna cross over in January too. All right, man. Let's see who in the chat, and then I'm gonna give the solution. Right? Don't forget, we leave in doubt. We leave in fear. We leave in being undisciplined. We leave in no game plan back there in 2023. And we're making the leap to financial freedom in 2024. Hear me. Leave it. Leave it behind. Leave it back there. And take the leap to financial freedom. Now, let's see who in the chat, then I'm going to get a solution. What's up, Here to Learn and Share? Michelle Tucker. Happy MLK Day, Michelle. And everybody else. FC. What's going on, FC? Move the mic back out the shop. Rhonda Green. What's up? What's up, Kim? Kim, congratulations for crossing the threshold. Congratulations. Sonya, you close. What's up, Sonya? So I know you got to be getting close, Sonya. Sonya, you next up the bat. You next up the bat, Sonya. Right there. You right there. You right there. Right? You next up the bat, Sonya. You're getting close, right? We say the return of the Sunday streams. I don't know. I doubt it. What's up, Deborah? What's going on, Cameron? What's up, Cameron? I ain't seen you in a while. Hey, Shosh Maniac. Come here. Come here, Shosh Maniac. The other day, I did a whole live stream just for you, Shosh Maniac, and you tapped that. You tapped that early on me. The entire live stream was done just for you, Shot Maniac. And you tapped that early on me. When we got toward the end of the stream, I asked you a question and you weren't even here no more. You tapped that early on me, Shot Maniac. What's up, Pamela? What's going on, Zay? What's up, Robinson? What's going on? Hola, que pasa, Valdez? Hey, shout out Valdez kids. To Valdez kids, I think it's the 6-year-old. Aranya Grande says, Spally, where you at, baby? Hello! What's happening? What's up, Black Al Davis? What's going on with you? I forgot to check to make sure it was working on Twitter. Is it working? I be simulcasting on Twitter now. If y'all don't like being on YouTube and y'all want to stay on the Bird app, I be simulcasting on Twitter. This man is straight trash. Oh, man, he punched a girl. Duck. Yes, it is. Yes, it is. I be simulcasting on Twitter for those who like the Bird app and want to stay on the Bird app. You can check it out over there. What's going on, Karen B? What's going on, Karen B, with the little hearts on your picture? I ain't never seen. Have I seen Karen? I don't know that picture, but I don't know. I don't remember that name, Karen. If I'm just forgetting your name, I jalapies. But if I'm not just forgetting your name and it's your first time pulling up, welcome. Hey, now, I made a bold statement. I said, stop watching trading live stream. Kashaya, what's up, Kashaya? What's going on, Kashaya? Kashaya, you got to click on the link and pull up and say hello to me, voice to voice. You ain't got to show your face. But you got to click on the link and pull up and say, what's going on, Tim? In your best Canadian accent. You got to pull up. Say, what's going on, Tim? Bob's your uncle. Hope all is well with you, Kashaya. What's up, Simon? I ain't seen. It's a lot of names I ain't seen in a minute. What's happening, man? Throwback gang in here. Now, I said that you need to stop watching Trade Live. Why do you say that, Tim? Why do you say that, Tim? I say that because you don't need to watch trader live streams. Well, let me say it like this. Watching trader live streams is not going to help you learn how to trade. Right? I'm pulling up my trading view right now. Because I might want to start typing up some notes, some notey note type stuff. I might want to start typing up some notey note type stuff. Right, for the note takers. For those who like to take notey notes. For those who like to take notey notes. Let me hide all this stuff. And I'm going to give the solution. Right? Now, when you hear me say, stop watching, oh, Simone. I'm so sorry. Simone. Yeah, Simone. I'm sorry. I was thinking it was Simon. Somebody used to tap in name Simon. I'm sorry. Simone. Man, I tore that up. Y'all know how I do. Y'all know how I do. Right? So, when you hear little Timmy Rogers say, stop watching your favorite live streamer, it's not to say there's anything wrong with watching live streamers, but if you watching these live streamers, right? It is a distraction. It's a distraction. And you need to be laser focused if you're trying to be. But Tim, how's it a distraction when I'm watching them trade? You said it. You said it yourself. You are just watching. Right? You are just watching. Like I say, unless you are copying, if you're copying, if you don't want to be a independent thinking trader and you just want to copy someone's trades, hey, this stream is not for you. Go ahead and copy to your heart's content. Now, back to the rest of us. You just said it. You just watching, right? Okay. And then let's just pick a 3. Let's say it's a distraction. You just watching, right? And the delay, the 15 to 20 second delay of the tube, right, makes it impossible. Makes it impossible, if I spell it right, makes it impossible to copy efficiently, right? I'm doing just 3 reasons off the top of my head that I'm just throwing out there, right? Just for now, 1, it's a distraction, right? It's a distraction. I'm listening to you while at work, but I'll pull up next one for sure. Bob's your uncle. Hear me. Hey, so check it out, right? It's distraction. Why is it a distraction? Because you're not focusing on, is price sticking to? That's the reason why you shouldn't. Right now, let's get to the solution. For the people who want the solution and don't want to hear me run my mouth, they can be out of here. Okay? Don't want to hold nobody too long. Right? This is the solution. 1, have a strategy. Have a strategy, right? Have a strategy. That's 1, right? Know your entry and exit price before I'm just say pushing the button. Push the button. Before pushing the button. Right? And then 3, since we did 3 on that side, we're going to do 3 on this side over here. Right? Stick to your plan. Stick to your plan. Right? This over here is the reason why you shouldn't watch live streamers. Right? Nothing's wrong. Now, don't misconstrue what I'm saying. Don't watch the live streamers during the market hours. It's perfectly fine. And I do so myself. That is how I know about these people. Dodgy, Casper, Lens, Patrick Whelan, Kimmel, Michael. This is how I know about these people, because I go and I watch their live streams and their videos they upload after the market is closed. This young man over here, Dodgy, I think he like 22 years old. I've learned so much from him about inversion fair value gaps. I can't lie and say I learned a lot from Patrick Wheeler, because I only looked at like 2 or 3 of his videos, and he don't trade like the type of stuff that I trade. So I really don't look at his videos. Kimmel, I ain't really learned that from Kimmel, because the stuff that he talk about is like just generic, like fun reviews, and when he's actually trading, you know what I'm saying, he talk about like the stuff he looking at doing, but he don't do a lot of teaching. Lens, she trade Forex. I used to just look at her streams because it was a nice break away from watching ICT stuff. You know what I'm saying? Now, the way I get my break away from the ICT concepts, I listen to Top Step. I listen to Top Step while I'm trading. I listen to their live streams while I'm trading, because they trade totally different from, they trade like real floor traders. They, you know what I'm saying, because they former floor traders, so they got a total different way of trading. They trade based off of stuff that they trade off of value, weekly value, the point of this and point. They got all these terms they use, you know what I'm saying, and they watch the DOM. They be looking at the DOM, and they trade totally different. So I listen to them just to have something on about the market, right? But those are you can go back and watch their. I ain't saying don't watch them. Watch, you know what I'm saying? Don't even, if I'm on during the market time and I'm talking about actually trading, if I'm not just on trying to read tape or trying to teach something, don't even watch mine. You know what I'm saying? Because it's a distraction. What is it distracting you from? It's distracting you from your plan. It's distracting you from your strategy. It's distracting you from watching, has price come to the level that I want to get in? Has it come to the point where I want to get out? It's distracting you because if your favorite streamer is bearish, but you bullish, now you second guessing yourself. Now you like, oh my goodness, Casper's bearish, but I'm bullish. Patrick trying to sell, but I'm trying to buy. You don't know what they looked at overnight. You don't know what levels they was watching. You don't know what time frame they trading off of. It's a distracting. They distracting you, right? And then when they distracting you, you just watching. What is the only way you can make money in the stock market? Execution. If you don't execute, you will not make any money. True, you won't lose money either, but you will not make any money. And I can't even say you're not losing money, because shout out Trap. Trap said a dollar that ain't moving is a dollar that's losing. And the reason why I understand that is because inflation is constantly going up. So if your money is not making money for you at the rate of inflation, you're losing money. Your dollar's not worth what it was before. Me and my son was just talking about this the other day, and it was like a throwback movie we was looking at, and I was like, man, that was a lot of money back then. You know what I'm saying? And it was, I can't remember how much it was. What? How much was that they was talking about? And I was like, that was a lot of money back then. And you looked it up. How much money was it? $234. What we was looking at? Beverly Hills Cops. It was $234 a night. And what was the inflation rate based off of back then and now? Yes. So back in the 80s, when Beverly Hills Cop came out, $234 is the equivalent of $690 today. So that means your dollar ain't worth what it. Your dollar ain't worth nothing. You could get, for an expensive room of $295 back then, that same room, the equivalent is $695, $690 today. $280. You see what I'm saying? Y'all get what I'm saying, right? You just watch it. Dollar that's not moving is dollar that's losing, right? And then if you're trying to copy, you have no understanding of the price you want to get in and get out at, right? Number two, right there. Man, look at God. You see how these just fit together? I just made this up off the top of my head too. Look how they fit together. The 15 to 20 second delay on YouTube make it impossible for you to copy efficiently, because if you don't know your entry price and you don't know your exit price and you're waiting for your favorite streamer, any of these people, including this big ugly guy right over here, any of these people right here to say, hey, I'm getting in at 48.80. I'm getting out at 48.50. By the time that 15 to 20 second delay come in, they can be out the trade and sitting there chilling, and you don't even know it. And it's starting to go against you now. And now you're taking a loss. You're taking a loss now, because you're looking at the delay through the tube. Now, if you're inside of a Zoom don't have that delay like that. You know what I'm saying? But if you're inside of a Zoom room, you paying for that live stream anyway. You're in a trade room where you're paying to go into the trade room and copy. They're calling out trades for you. So I ain't even talking to you. I'm talking to the YouTubers that's out there looking for the Holy Grail. You want to know what the Holy Grail is? The Holy Grail is over here. This is the Holy Grail. Now that I've given you the solution, this is what I'm going to do now. I am going to lay out a plan for, you know what I'm going to do? Since I ain't always been an ICT trader, I'm going to lay out for you. Let me go back. I can't remember what it was. I got to go back. I had it on a slide before. I'm gonna give you ICT strategies. These are entry models for day trading. And then we're going to convert those over to swing trading. And then I'm also give an entry technique not based on ICT models, just because y'all pulled up. And then you can say, hey, Tim, that doesn't fit with my trading strategy, and you can never use it. Or you can say, you know what, that makes sense. I may try to implement that into my strategy, because there's no such thing as one way to skin a cat when it comes to this market. Somebody gotta win. Somebody gotta lose. I'm opening up my what's name because I want to see. I'm opening up PowerPoint because I want to see. I remember right there. That's why I remember seeing it, because I had just saw it the other day. Look at me. We're gonna do this one first. We're doing this one first. This is the first one we're gonna do. So this is the first one we're gonna do. We're doing this one first. If you are right, and it don't have to be with options. It can be with shares. It don't have to be with SPY. It can be with any ticker that you choose, right? Any ticker that you choose, right? So for swing trading, right? I even had a OPEX. That's how I usually say it, but option expiration, I had a OPEX strategy, right? There was an OPEX strategy that I used to use, meaning like during the week when we had our monthly expirations, right? During the week when we had our monthly expirations, for the if it was giving me signs, if I got the signs to enter, and what was the signs? If we got like anywhere from a 2 to 3% move, right? If we got like a 2 to 3% move retracement, then I would either get calls or puts at the money, right? I would get calls or puts at the money, right? And I would get them, you know what I'm saying, 1 to 2 week out for the puts, because I didn't like to hold puts that long, right? And I would get them anywhere from a month to 3 months out for the calls. So with and if anybody who don't know what option expiration is, every third Friday of the month, you have to close them positions. They're gonna close. They go away. So the, you know what I'm saying, people who don't trade intraday, they typically buy their options, you know what I'm saying, for like a monthly time frame basis. So no matter if you buy it for 1 month, 2 months, or 3 months, the monthly expiration is going to be that third Friday in the month. So during that week prior to, and that week leading up to that Friday, it typically used to be a lot of volatility. You see what I'm saying? So if we got a 2 to 3% retracement, right? If we got a 2 to 3%, let's just say we're going to use retracement for going up, and we're going to use pullback for going down. So if we got a 2 to 3% retracement, then I will buy at the money puts, right? When it hit my price target that I wanted it to retrace to, at the money puts for 1 to 2 weeks out, to give it time to play through OPEX. That don't mean I was going to hold it all the way through OPEX. I was just buying it 1 to 2 weeks out to give it an opportunity to play through OPEX, right? And since I'm a naturally bullish person, if I got a 2 to 3% pullback, I would get at the money calls for 1 month to 3 months out, because the market is predisposed to go up. So if it pulled back to my price level, I got it for 1 to 3 months out so that I can hold it longer, because I like holding calls longer than I like holding puts, right? If we got a strong pullback or retracement, right, I'm either buying, and you see like down here on the big pullbacks, you don't see nothing about puts, because I'm not buying puts this amount of time out.
You see what I'm saying? If we got a strong pullback of 5 to 7% and it came to my price target, I'm looking at the money calls from up to 6 months to 1 year leaps, right? If we got a 5 to 7% pullback, right? Up to 6 months in time. If I feel like it's going to run, I might just get it for 1 to 2 months out and that's going to help me get more bang for my buck when it comes to options, right? Because it's a shorter time, and I think it's about to run. The shorter time frame gonna run a lot more than the longer time frames. But you know what I'm saying? Understand your asset. And for corrections, when it's 10% or more, same thing. At the money, but at this time, I would look for like 2. You said screen blurry. Is everybody screen blurry, or is it just Black Al Davis? Right? But this time I'll be looking at 2-year leaps, right? And as you know, this right here, this some throwback stuff because we ain't been in no leap environment in a long time. I can't say the market was trying to get a little bit better, but I ain't thought about buying no leaps in years. Matter of fact, I placed my first options trade the other day. And it was successful. I felt good about it. I placed my first options trade that I had taken in months, and it was successful. I only held it for like 1 day. I bought it for a week out, and I only held it for 1 day, and I got 200% on it. Right, it hit my target. How can you manage your risk? You manage your own risk, but when you swing trade, and you got to allow for a bigger stop loss. You have to. When you're swing trading, you have to allow for a bigger stop loss because you're trading off of a daily or maybe even weekly chart. So your stop loss has to be bigger, right? You can't get out there with a 1% stop loss on a swing trade. You're never going to win. You're never going to win unless you get lucky enough to catch a tiger by the tail every time. You can't go out there with a 1 to 5% stop loss on a swing trade. You're never going to win. You got to let it breathe. You got to let it breathe, right? You pick your stop loss, your risk management. I was willing to risk 20% on a swing trade. That's what helped me out. Like with the trading the SPY, the Qs, the SPX. The SPX moves so violently, you got to have a bigger stop loss with that. But the Qs and the SPY, you know what I'm saying, 20% was a sweet spot for me. That was for me. I didn't take, you know what I'm saying, I took losses, but I didn't take, you know what I'm saying, I wasn't constantly lose. I wasn't constantly getting stopped out, right? When I first got in the game, I was listening to people talk about, oh, you don't want to risk no more than 5%. I'm trying to do 5% stop losses. And y'all can ask my sweetie. I was complaining all the time. I'm like, I keep getting stopped out and it keep doing what I thought it was going to do. I was like, I ain't going to use stop losses no more. You know what I'm saying? I was so pissed off. I would get stopped out constantly, and then it would do exactly what I knew it was going to do. And then I had to start going off my own data. That's why I said, stop watching your favorite live streamer. Have a plan. Have an entry price, an exit price, and stick to your plan. Actually, I say have a strategy, but same thing. Okay. And then that's how I used to shave it. There you go. And you can use this for, it don't just have to be options, right? Get out of here, right? Let's come over here and we're going to go to, somebody give me a ticker. Somebody give me a ticker. It says eyes must be bad. That got to be your eyes or your internet. Can't trust radio internet. Apple. Of course, Towns goes, what's up, Towns? Of course, Towns gonna say Apple. Let's go to Apple, right? Let's go to Apple. We're gonna put this on a daily chart. right? We on Apple. Well, man, look at that gap down on Apple. When the Apple gap down like that on the second, man, the first day of the year, Apple gap way down there. Apple gap way down there. Man, I ain't gonna hold you. If I was still trading Apple as an individual company, Nvidia, we'll look at that too. If I was still trading Apple as an individual company and I saw this mean liquidity void right here on this gap down, right? This mean liquidity void on this gap down, and then we came into that fair value gap, and that bullish breaker right there, this day right here, I would have been buying some at the money calls. I would have been getting at the money calls. And what price would I have been trying to get them at? At $181.99. Why would I have been trying? Can anybody that's in the gang, can anybody that's in the gang tell me why I would have been trying to get these 182 calls, because we closed, because the price of 181.99 on this February 5th candle. I mean, it's January 5th candle. Why would I have been why would that have been my price that I was trying to buy? Why? Can anybody in the gang, I know y'all know this. Don't embarrass me out here on Al Gore's internet. Don't embarrass me out here on where is Rhonda in here? Rhonda, you in here? Michelle, you in here? I know you know Here to Learn and Share. I know Rhonda, yeah, you in here. Why am I looking at, why would I have been looking at that 181.99, 182 calls on this on that Monday, January 8th? No, not a fair value gap. Not a fair value gap. Why am I Rhonda? Michelle, I know y'all know this. Breaker, no, not breaking fair value gap. We talked about the breaking the fair value gap. The breaking the fair value gap, I said, why was I looking at that price? Why was I looking at that price? No, not discount price. Why was that my price? Right? This February 5th candle, that 181.99, which would be a 182 call. Why was that my price? I already said we came down, we came down into, right? If you look at this right here, we got this move here, we got this move over there, right? Coming from that one to that one. We well in the discount on that. We well in the discount in the overall move, right? We've come back to the breaker of the overall move. We already said that, right? We hit this fair value gap, right? And now this day right here, right here, we respect the breaker. We respect the consequent encroachment of the fair value gap. So on this day, I'm going to be looking to buy at that price right there. Why? You will be, no, it's got nothing to do with being in the money. PAO on the premium side. Are you trying to say pang out? That ain't how you spell pang out. It closed above the C confluence. Imbalance. No. Very good on all the answers. Everybody pulling out the hard hitting answers. Very good on all the answers, but that's not it, right? The reason why is because that price right there, that would be the change in the state of delivery price for this leg up right there. Why? What do you mean, Tim? We came down here to an anticipatory reactionary point. We respected all of this stuff right here. So now we're anticipating price to draw back to this liquidity void up here. And if price starts to draw back to that liquidity void, that opening price of this bearish candle, that is the price that the algorithm is going to remember. This is the change in the state of delivery. What do you mean, Tim? Price was moving bearish, right? And when this candle pushed back up, right? Now this entry is a swing entry. I'm anticipating this to close above this, right? In actuality, you really don't have to close above it, but I'm anticipating it to close above it because once we move above that price, the algorithm is going to lock that price in now, because the algorithm don't care about these lines I draw on this chart. It don't care nothing about this fair value gap that I drew. It don't care nothing about that line on that breaker that I drew. What it care about is 180.71 is the closing price of this bullish breaker. What it cares about is 181.99 is the opening price of this last down close candle that went into that bullish breaker and then rejected off of it. It knows that it closed. It knows that price closed at 181.18, which is higher than 180.71, which is saying I want to keep coming up. So when price start coming back down, once it gets down here to his 181.99, all it's doing is accumulating more liquidity to push up, because it doesn't want to go back down. Why? Because this breaker's job is to trap anybody that got short coming down here and didn't take profit right here at 167.62. If they didn't take profit there, they're out of gas. Why? Because this price leg down here was simple manipulation to run stops up under 167.62. The algorithm remembers that. And when the algorithm pushed up and closed above this 181.18, I mean 180.71 on this breaker right there, right? Now its job is to stop price from coming back down to let these people get out with a small loss. It don't care nothing about what little Timmy Rogers drew on this chart. It don't care I got them boxes there. Hey, look how price respecting my box. Don't care nothing about that box. It just know that this price is where it needs to stop. That box is just a visual representation for me, right? So I said all that to say I want to buy at that price. Why? Because that's the price that the algorithm is going to buy it. It's going to buy at that price. Little Timmy went down there. It's buying at that price. They buying millions of shares, millions of contracts. They can't get them all at 181.99. They got a range. They got a range. That's why this whole little fair value gap, you know what I'm saying? They're digging into that fair value gap, filling their orders, right? They're digging in there, filling their orders. And the more it respects the consequent encroachment in the top 25%, the more bullish it is. That means price is really trying to get away from this area and leave people trapped. So if you're trapped, take the signs and get out. Don't marry your bias. I think you better let it go. Now, that's why I will be trying to buy at that price, because that right there is the change in the state of delivery, because price was bearish. We came to an anticipatory reactionary point. We respected these PD arrays, right? Price is showing you, yes, I'm ready to react. It's reacting. It's reacting. And then here we go. We're reacting. Now, I would have been buying calls there, down there. Depending on how far out I bought it, I probably would have been in profit by now, because I don't be shooting for no home runs. If I bought it way out, I'll probably still be in. If I bought it for like a month out, I probably would have took profit already, because from 182 all the way up to 187, that's a $5 move in Apple. And depending on when you bought your contract out, yeah, that's a nice percentage. That's a nice percentage. 30 to 50% to get you the glory. Trust me. All right. Now, that's ICT type stuff. Y'all see that's ICT concepts of getting in on Apple. Now, we was talking about percentages, right? So we're looking at here. We're gonna go from the high right there. Right. Apple came down almost 10%. We're just gonna say roughly 10% from peak to trough, roughly a 10% pullback. Right? Roughly a 10% pullback. So you would, whatever your buy-in price would be, I would have been looking for some reason to buy down here, right? If you look at support and resistance, right? If you look at support and resistance, right? Let's come to this high right here and let's see if we can find some support and resistance, right? Zoom in, resistance, turn support, right? Right there. That's a good support and resistance traders right there. So you got a 10% pullback right there. Your buy-in price probably would have been 182.34. Why? That's your resistance turn support, right? Support turn resistance, resistance turn support. It came back to the support again. That way you got a 10% pullback coming to support. Booyah! Right there. Right there. Booyah right there. Did I close my thing? Same thing. You see, look at God. See how that played out? Right there. Right? We had more than 5 to 7%. So you had a 5 to 7, almost 10% pullback, right? Almost 10 anywhere. So we're just gonna say 7 to 10% pullback, came back to a level of support, 182.34. That's your number. That's your price. Boom. It hit 182.34. You bought it for anywhere from a month to 6 months out at the money calls. If you felt really bullish on it, you maybe even went out to a 1-year leap. Booyah. That's how you do it. Non-ICT way. Killed 2 birds with 1 stone with Apple. I showed you an ICT way and I showed you a non-ICT way of, you know what I'm saying, how to enter a trade. That just, you have a simple plan. You have your strategy. You have your plan. You stick to your plan. And you don't care what other people say. You don't care what other people say. Somebody said NVIDIA. Nvidiosity, right? So NVIDIA, let's look at NVIDIA. We were consolidating here, right? We got us a nice little consolidation forever and a day. Look at that. You see that? Yes, right there. Get up there. Look at that. Forever and a day. That's from July 2023 up until January 2024. NVIDIA just been going sideways, right? Now, there's a couple ways you can look at this, right, with NVIDIA. If you are a breakout trader, the way I used to play breakouts when I traded, right? Once we broke out of the consolidation, right? Once we broke out of the consolidation and we got a strong move like this right here, I like to see that. That is bullish to me, right? Now, what I would be looking for, let's see how much of a move we did, right? Breaking out from the top of the consolidation, from the highest point of the consolidation to the highest high. Boom, we had a 10% move, right? We had a 10% move, 9.5% move. Now, this is bullish to me. If if I want to make some money going against the grain, right? You could buy a small put position. You can buy a small put position and trade it back to the consolidation. If you want to make money against the grain, that's trading against the grain. I don't like trading against the grain, but you can make money both ways. You can get you a small put position, trading back against the grain, but you don't want to just jump in because it moved 10%, right? What you want to do if you're trying to play against the grain, right? You want to see price disrespect the lows. You want to see price start disrespecting the lows. As long as price is continually disrespecting the highs, right? And like this inside day right there, that inside day right there, that's when you put it on your watch list right here. This inside day on the 12th, Friday the 12th, you say, we had an inside day. You put it on your watch list. Why? Because you had the breakout. You had a really strong breakout, right? You took out the highs. You took out the highs. You took out the highs. So you had a breakout on the 8th. On the 9th, you took out highs. The 10th, you took out highs. And on the 11th, you took out highs. Then on the 12th, you had an inside date, right? Even though this is a red candle, that's a very bullish candle. This candle on the 11th is red, but that's a bullish candle. We closed in the top 3/4 of that date, right? This is a bullish candle. Don't get it twisted because it's red, right? Closed above these highs and in the top 3/4 of the candle, right? Now, this inside day right here, that's when you put it on your watch list, okay? And then for me, right, I don't really like, you know what I'm saying, trying to play, you know what I'm saying, puts for a long period of time. So, you know what I'm saying, once we come down and start disrespecting these lows, then I'll be looking to play puts back down to the consolidation. But the way I would play it, little Timmy Rogers, right, is when price came back down to the consolidation, right? Price came back down to the consolidation. My buy-in price will be 505.48, right? And I will be giving it to that low, right? I'll be giving it to that low. All right, I'm coming back in, buying my calls. I'm giving it to that low. Because if we push through that low, that's a bearish shift in market structure. I'm no longer bullish if we push through that low right there, right? And that's just all of this is non-ICT stuff. This is non-ICT stuff, right? Because you come here from the high back to there, that's almost a 9% pullback, right? 9% pullback. What did I say? Right there, 5 to 7%, 10% or more. So somewhere between 7 and right there. You got your at the money calls 1 to 6 months out. That was my strategy. That's how I traded, right? Ain't nothing wrong with watching people on their live streams. Nothing wrong with it, right? But if you're watching it looking for the Holy Grail, you're looking in the wrong place. You need to start with the man in the mirror. That's where you need to start. Look in the mirror. That's where you're going to find the Holy Grail. You're not going to find the Holy Grail looking at somebody else is trading their system. Can we learn? Yes, we can learn from people. I've learned a lot from a lot of people. I got friends that I've learned from. I got people that I don't know that I learned from, but I, you know what I'm saying, I found them on the internet or I bought their courses. You know what I'm saying? It's always good to build with people, bounce ideas off people. But if you're watching live streamers hoping that I'm going to copy what they do, You ain't gonna never be successful. You ain't gonna never be successful. Start with let's do I forgot to do something for intraday. I was talking about swing trading. I forgot to do something for intraday. Let's do intraday. I'm sorry. Can't leave out intraday. Since I'm a day trader, I'm gonna just leave out intraday. Right? I've said this a million times. Right? I've said this a million times. Let's go to my new buddy. I got a new buddy, y'all. My new buddy is the NQ. Speaking of NQ, let me say this right here. I've always felt like, and I ain't gonna lie, I felt victim to this when I first started out trading, especially when I started trading futures. I would hear people saying, you know what I'm saying? It one of the first people I heard say it was Ian. And this is no shot at Ian. But this is one of the first people I heard say, because when I first started trying to learn how to trade futures, he was one of the people that I came across. And he would say stuff like, start with the ZB because it moves slow, then move to the ES because it moved a little faster, but stay away from the NASDAQ until you learn the ZB and the ES because it moves so fast, right? And the other people used to be like, NASDAQ, disrespectful. NASDAQ could do this, NASDAQ could do that. Let me tell y'all something. That comes from when people tell you that, that's because they don't understand what price is going to do. Right? And that's no shot at them. I'm not disrespecting anybody. When you don't know what price is going to do, you are afraid of the volatility. And when I say volatility, I mean the sporadic and quick movements. That's what I mean in the sense of volatility here, because you can use volatility for a lot of different things, but you are afraid of the quick sporadic movements when you don't know where price is going. But if you know where price is going, then you can't. Price is price. It don't matter if it moved like a turtle. Do you want to know that you're wrong fast, or do you want to know that you're wrong slow? Do you want to wait 4 hours to realize you was wrong? Or do you want to know that you was wrong in 4 minutes or 30 seconds? Let me know I'm wrong in 30 seconds. Don't have me sitting here for an hour and a half just to be wrong. That's just how I feel. Let me know I'm wrong. That's why I don't trade the Asian. It take me 4.5 hours to figure out if I'm wrong. And then sometimes it be taking so long, I just close the trade and then I come back and I never would have got stopped out. I closed it for a loss for no reason. Let me know I'm wrong right now. And then so stop telling new traders to stay away from the NQ. Please. Let's do that in 20. I need to put that up here. Because we're going to leave this up until the end of January. I need to put on there, stop telling new traders to stay away from the NQ. Because price is price, man. I'm going to get off my soapbox now. Okay. What was I talking about? Intraday. All right. Intraday. Okay. Intraday. Now, when it comes to intraday trading, right? The daily candle, it can be very helpful and it can be very not helpful, right? It can be very helpful and it can be very not helpful. Tim, what are you saying? The daily and weekly candle, you want to put weight on it when you're coming to those significant price points. That's when you want to start putting the weight of the daily and the weekly, right? If you're trying to take a 5-minute trade based off of a daily candle, you may find yourself offsides a lot. because intraday price has to do so much to create this daily candle. And if you're trading on a 5-minute chart, right, you need to have the narrative of the daily combined with the 4-hour, combined with the 1 hour, combined with the 15 minute down to the 5. You have to, so you can't just make your 5-minute decision based off of the daily candle. You have to make your 5-minute decision based off the daily plus the 4-hour plus the 1 hour plus the 15 plus. You see what I'm saying? The stars need to align so that you can make your decision. Right now that we got that out the way, Tim, what are you talking about? I'm glad you asked that question. Glad you asked that question. Right. We're going to highlight this day right here. We're going to look at this Thursday. Right. We're looking at this Thursday. Let me get rid of that Friday candle because we only want to look at that Thursday. Now, we're going to go down to a 5-minute chart. Went down to a 5-minute chart. You see how much stuff happened on the 5-minute chart for that? I highlighted just that one day. That one day that I highlighted, look how much stuff happened during that one day. If you look over here, during that old slot, that old stupid Asian, look at that. Ain't doing nothing. How long is this to figure out that you're wrong? You know what I'm saying? You're going from 6 o'clock all the way over here to 3 o'clock in the morning when the London opened before it take off and finally stop you out. Man, that's too long to be waiting. Now, see all this that's going on the 5-minute? Looking at this right here, right? Looking at this 5-minute chart, it's impossible to just go in and make a decision to get short right there. You know what I'm saying? Or it's impossible to make a decision to go in and get long. Let's go back up to the daily. Right? Boom. Looking at this right here coming up, right? That's a bullish candle. Let's keep going up. Right? Let's look for reasons to buy. Right? That's what everybody would agree. This candle right here, let's look for reasons to buy. Right? We had an explosive candle here, right? You had a little small candle, then we had another explosive candle right there. Right? Let's look for reasons to buy. We even closed above this daily fair value gap right there. Let's look for reasons to buy. Right? Now, let's go back down to the 5-minute. Before we go to the 5-minute, let me mark out this high right here. Boom. All right, now let's go back to the 5-minute. Okay, so when the day opened up, made our way back up to the daily high, got above the daily high, right? Got above the daily high, came up here, took the daily high out, and dropped down, right? Now, if you're not taking into account everything that has going on from the daily on down, right? You're just looking at this 5-minute chart and saying, hey, hold on, let's get here. Let's get to the time when most people gonna be trading. 9:30. Let's go over to lunch. Let's go to lunch. All right. 9:30 to lunch. All right. We don't need this box no more. We know what we're looking at. Now we look. Let's make a new box. Let's make a new box. We're looking at 9:30 to lunch. New York time frame. All right. 9:30 to lunch. Now, the only thing you know is the daily bullish. I'm looking for reasons to buy. The daily bullish. I'm looking for reasons to buy on the 5-minute chart. So now, and then you see price come up here, take off, push up there, come really close to that high right there, right? Start pulling back. You like, oh, it's giving me an opportunity to get in. Right? It's giving me an opportunity to get in. I'm gonna buy off this fair value gap right there. It gave me a deep discount. It's giving me a deep discount. It's coming back down, coming into this order block, coming back to that fair value gap. Boom, you get in right there and you real happy. You uber happy right now until the 10 o'clock macro come in and bust your head to the white meat. Right? Why? Because you're trying to make a decision, right? The daily candle was bullish. So on the 5-minute, I'm buying. I would say you got to, it's all about understanding the narrative. You need to understand the narrative through all the time frames, right? Tim, why you said all that? I said all that to say, right? 4, a day trading entry model, right? Let's go to a 60-minute chart right here. Right? A day trading entry model that you can utilize. And it don't even require you to have a bias. This don't even require you to have a bias. All right. What such thing is this you speak of, Timotheus? I'm glad you asked. What is that? I'm just deleting everything. Wait a minute. I probably don't need to be deleting everything. Okay. Okay, so I probably shouldn't have deleted all that. We're going to look at New York, since that's pretty much what everybody be trading. Even if it's for the London, just transpose it for the London. All right. So we're looking at like the New York morning or the New York afternoon, whatever you want to trade, right? Let's go to 15 minutes so we can mark it out properly. Okay, so this is our time frame we're looking to trade, the New York morning. Right, we're looking to trade the New York morning right here. This is our time frame we're looking to trade. And if you trade the New York afternoon, just transpose it over to the afternoon over here from 1:30 up into 4, right? Just transpose it over. Same, it relates the same, right? So you got the New York morning. We're going to write that out. New York AM. All right. If that's in your set, just transpose it to your session. All right. So the time that you trade, right? When you come into the time that you trade, what you want to do, you want to look at the prior session, right? If you're near a prior session, high or low, you want to look at the prior session. If you're above or below that prior session's high or low, you want to look at the prior day, high or low, right? So in this case, right here, we have the London, meet me at the London, 3 a.m. right here from 3 a.m. Oh, this is like 5 right here. This is the London kill zone, right? The London kill zone from 1:30. That's the London kill zone right there. What's the importance of the kill zone? This is time-based liquidity, right? This is time-based liquidity. Lows and highs made during the kill zones are high priority liquidity, right? High priority liquidity. Now, what do you do with this information? Okay, this right here is your buy side liquidity from the prior session. Template buy side liquidity, right? That's your buy side liquidity from the prior session. Make this big so y'all can see it. Turn my lock on so I can lock. Right? So you got your buy side liquidity from your prior session. You have your sell side liquidity, right? That's the lowest low and the highest high from the prior session kill zone, right? From the prior session kill zone. That's your lowest low and your highest high from the kill zone. Okay? I hit the wrong thing. Okay? Now, coming into your kill zone, right? Coming into your kill zone. The New York kill zone, y'all know I started at 8:30. You can Forex 7:30. I started at 8:30 because that's the news embargo lifts. During your kill zone, right? You look for an attack on liquidity from the prior session. For the note takers, I had notes for the swings. We're going to have notes for the intraday, right? Attack on the high or the low from the prior session. 1, attack the high or low from prior session. If you're above that, you ain't nowhere near the high or low from the session. Look at the daily high and low. Right? If you ain't nowhere near the prior session, look at the daily high and low. Cause I hear somebody say, Tim, well, what if it ain't trading nowhere near there? Okay. How does I'll make it simple. Does price displace or reject? Does it displace or reject? Right? And once you see what it does, once it attacks liquidity, then start looking for your entry model. Looking for your entry model. Right? Now, coming into the New York kill zone, we attack the London highs. Does it displace or does it reject? It rejects. It rejects. So now that price has, when price rejects a high or low, right, the draw becomes the low or high that sent you there, right? In this case, we took out that low immediately. So what do? What did it do at the low? It displaced below the low, right? So it attacked the high and rejected, but it immediately took out the low on this 15-minute. The lower time frames probably could have gave you something, but on this, if you trade in the 15-minute, you attack the high and reject it. So you start looking for the low that sent you there. This is the low that sent you here. This is the parent low, right? It took out the parent low, but it displaced below the parent low, right? How do you know it displaced? It closed below it, and then created a fair value gap. That's displacement. It displaced below the low. So at this point, you should not be looking to go long. Even though we had a bullish daily candle the day before, we have taken out buy side liquidity above the daily high, right? engineered liquidity in the form of consolidation, attacked that engineered liquidity, and then displaced low. So you should be looking for shorting opportunities right here. Even though the daily candle was bullish, guess what? The daily candle did it did its job when it went above that daily high. That's all it was required to do. That bullish candle, its only requirement was to attack that buy side. Buy side was attacked. And then we started to consolidate and engineer liquidity, attack that, and chose a side. Right there. So wait for an attack on liquidity from the prior session. Look to see if it rejects it or if it displaces. If it rejects it, right, look for an opportunity to go in the other direction. If it rejects a high, look for opportunity to sell back to the low that took you there. If it rejects a low, look for opportunity to sell back to the high that took you there. If it displaces above the high, look for opportunity to get in to, you look up and to the left, right? What's the next high I can trade to if it displaces above the high? What's the next high I can trade to, right? If it displaces below the low, look to the down to the left. In this case, it kept going down. You got sell side there. You could be looking at, right? Come here, line, right? It displaced below. And then look at this right here. When this displaced below that low right there, look what it created. It created equal lows. And when I tell you equal lows are a thing of beauty, equal lows are a thing of beauty, I'll give you this and then I'll yield my time. Whenever you see price create equal lows like this, right? Yeah, it's a tick or two off, but you see that right there. When it creates relative equal lows, from now on in your trading life, don't look at this as, ooh, that's support. Look at that and say, ooh, that's liquidity. Wait for price to trade away from it. Give you opportunity to short back into it. When price makes and I don't like for them to be like, look, what they call them, railroad tracks. What they call when the two candles be right next to each other. What they call them? It'd be like two candles right next to each other like that right there. I don't like when it be like that. When it be separated like this right here, that's when I start chomping at the bit. When it's just like if it's just two candles side by side, you know what I'm saying? Like these right here, those too close for me. Right. The only reason why these look appealing to me is because we got a lot of highs just running in a row right there. That's real clean. But if it was just them two candles hanging up there by themselves, I don't salivate over them like when I do like this, when it's this far apart. This right here is from like Wednesday at 3:45, and this right here is from like Thursday at 8:30 in the morning. Ooh, I salivate on them, right? Because those equal lows that's far apart, right? Retail seeing that as good support. That's good liquidity. That's good liquidity. Now, that's it right there. That's your intraday model. Look for an attack on a price session, high or low. Did it displace or reject? Once you figure that out, start looking for your entry model and take it back to the low or high that sent you there. If it displaces, look for the lower high up and to the left or down and to the left. If it displaces, look up and to the left. If it displaces, look down and to the left. If it reject, look to go back to the low that sent you there. If it reject, look to go back to the high that sent you there. That's it. I yield my time. Thank you for hanging out with me. Does anyone have anything for me? I don't have no high quality H2O to drink. Does anyone have anything for me? Let me see if anybody else pulled up in the chat. I appreciate y'all for interacting in the chat. I know how it is when people just be asking questions. You don't know exactly what they looking at. I'll be like, man, we don't know exactly what you're looking at. Just give us the freaking answer. Is that market structure? Is what everything I was talking about, it has something to do with market structure. What you want to know about market structure, Karen? What you want to know about market structure? Market structure is a very broad term. What do you want to know about market structure? I like it a lot. I like it a lot. Who's a clown? Simone trades NQ every day. I thank you. I thank you. Derek, what's up? That's my dog. Derek, what's up, Derek? What's going on, E-Rock? Why does no one trade the Russell? I don't know. I'm assuming people do trade it because it's out there. I'm assuming somebody trades it because it's out there. I don't know. Small cap. IWM. IWM. People trade the Russell. IWM. Talk about the Russell futures. I'm pretty sure somebody traded because it's there. If ain't nobody traded, it wouldn't be there. Great video. Jim. Thank you. Rodwell, congratulations for I don't know if you was on here earlier, but you made it to 1 year with the gang. Shout out Rodwell. Made it to 1 year. That was her answer to your question earlier. Okay, then, class president. I was super late. Are we still having Q&A tonight? Or is hold up? What's the day? That's next week. It's the what's this, January? Yeah, it's the first and third Sunday. So it's the 21st, E-Rock. The first Sunday, we did it last week. We did it on Sunday, on the 7th. So then we got it on the 21st. Lots of gems today, Tim. Question: in day trading options, do you suggest selling at your what's the LHF? Oh, long hanging fruit, or by percentage based on theta? I can't answer that question for you. That's going to be up to you. The way I day trade, I go strictly off percentage. And for my day trades, I keep very low percentages. I shoot for 30 to 50%. I shoot for 30. If price is really moving, I'll set a target for 50%. If it's not really giving me what I really want, if it's a slow moving asset, I'll set it for 30%. Often if I have multiple contracts, I just say if I have 2 contracts, I would take one contract off at 50%, move my stop loss for the other one to 30%, and then see how far it can go. And with the same day expirations, you really have to monitor those because the theta be eating them away. So you can get stopped out just because of theta. Price don't even have to move and it'll just stop you out because of theta. So I stick strictly with percentages when it comes to options, period. Like, since the option premium moved different from price, I rarely hit my price target on the ES or the SPY before my SPY options hit. You know what I'm saying? Like when I woke up, I had Friday, I had I bought it Thursday. I put in a profit target of 200%. I put in a profit target of 200%. And when I woke up on Friday at about 10:30, I came in to check and I was like, oh man, I'm probably down in that position. Let me go manage. When I looked, it hit my target. It hit because in the beginning of the day, price shot up. And if I wouldn't have had my profit target in, I would have been taking a loss. I wouldn't have been taking a loss. It was. The position was down. It was down from where I had paid. It wasn't like a total loss, but it had shot up and got me my 200% and then dropped back down. And I had bought it for like a week out. But I put it there because I was expecting a violent move up. You know what I'm saying? And that's what I got. Come on. Oh, yeah, but I stick well. Okay, my cat. I ain't wrong, am I? I ain't wrong. I'm right, right. We said the first and third Sundays. Yeah. The first Sunday was the 7th. Yeah, it's the 21st. Yeah, the 21st. Because the first Sunday was the 7th. And then, yeah, it's the 21st. It's the 21st. I had to check. I had to check the calendar and I make y'all know I be slipping. Y'all know I be slipping, but it's the 21st. 21st for the Q. But you can ask what you want right here. I'm on here. I think you said today at some point. I had today too. When I say today, we just did it Saturday. I mean, we just did it Sunday. Man, y'all trying me, man. I ain't said that. Let me open up my Google Calendar. I know I ain't said that. See right there. My calendar say the 21st. First and third Sunday. We had been said that a long time ago. First and third Sunday. In December. Man, I don't remember what I said last week. You want me to remember what I said in December? Thank you. I appreciate it. Glad to be back. Welcome back, man. How was uni? Are you still in uni? Or are you done with that, Kashaya? Hey, that's it. Ain't nobody got nothing else. Here to learn and share. And E-Rock trying to say that I said Q&A was gonna be tonight. They trying to say I said, anybody got anything else? I'm starting to get hungry. My wife cooked me a sausage, egg, and cheese sandwich today. That was so good. Charlie. Made me remember why I love that woman so much. That thing was so good. I felt like I hadn't eaten in forever the way I was eating on that sandwich. I don't see nothing else in the chat. I appreciate y'all for hanging out with me. Tomorrow is the King Day. Martin Luther the King Jr. Martin Luther the King Jr. King Day. I do, but I will save it for next Sunday. No, ask away, Derek. I'm here now. Might as well ask. You might mess around and forget. Might as well ask. I'm here right now. I'm gonna pull up, ask your question. Ask away, Derek. You can either ask or you can click the link and pull up and ask. Type it in chat or click the link and pull up and ask. Had us an inside day on the ES. La Doji. We had a Dojamite. We had a little Dojamite on the ES. Had a little Dojamite. Dojamite. High and low of the day. Still got that buy side sitting up there that the ES has not tapped into. If I ain't mistaken, I think the YM and the NQ. I think the YM and the NQ tapped that already, if I'm not mistaken. Let's check that and see. I went next Sunday. Got okay. Okay. You got it written down by your computer. That's cool. That's cool. Yes. Yes, they have. Both of them. The NQ and the YM has run that high. That's the high right there from March. We talked about that. The NQ ran it. The YM ran it. So both of them ran that March high. ES still has not touched that March high. Okay. Two things. We can look at that, right? That's the March high. We can look at it like this. If the ES does not have to get that, you know what I'm saying? It does not have to get to Picasso to be profitable. This right here could be our quarterly bearish divergence that we're seeing. right? This could be our quarterly bearish divergence that we're seeing, right? Take note now, because we've, right, YM taking highs, NQ taking highs, but the ES not taking highs. That's bearish divergence. You know what I'm saying? That's bearish divergence. So this could very well be a quarterly shift to give us a pullback. Remember that pullback Michelle Tucker was waiting for that we never got when we took off in October? Right? We took off in October and never, here, right here, when we took off down here in October and never got a pullback. Right? We did come back down into this breaker right here. Right? But look at that. From there to there, man, we never got a pullback. We could be witnessing a quarterly shift. Yes, we can. Yes, we can. Always keep that in the back of your mind. We could be witnessing a quarterly shift. Let's see what the monthly talking about. That's that high we was talking about right there. Still have not touched the December high. December high still intact. That March high is still intact. Let's look at the December high on everybody. I just closed them. I don't know why. All right. December high taken on the YM. December high not taken on the on the NQ, not taken on the ES. Again, this could be that quarterly shift that we're seeing. Don't know, right? NQ refusing to make the higher high. ES refusing. We're only halfway through the month, so it's not over yet, but it's struggling. The YM barely poked above. Always keep that in the back of your mind. We've been running a long time. A nice little pullback down here to this monthly fair value gap wouldn't be a bad thing. Wouldn't be a bad thing to pull back to that monthly fair value gap right there. I'm not going to mark it out right now because it's so far away, but that November candle is a bullish fair value gap. November candle is a busy. Remember that. All right. Right now we've played around with this December 11th busy for a couple weeks. Came down, touched that breaker. Right. That July breaker, touched that July breaker, and we pushed back up. Still not take out the buy side. That March buy side, still have not taken out that March buy side, but we are still respecting this July breaker and this December 11th weekly fair value gap. If I mark out the fair value gap, then you will see weekly bullish fair value gap. Stretch that out. You'll see that we've respected consequent encroachment. We respect the consequent encroachment and the top 25% of it. All right. So we respect the consequent encroachment, closed above the top 25%, closed above the high of that July breaker. All right. Came back down, took off, and then took out the high of that week. So we left the sell side and took out the buy side on this weekly calendar right there. Came down, left the sell side, took out the buy side. All right. So buy side has been taken. All right. The market chose to take buy side. The market on the overall, we came up, external liquidity, traded back down to internal liquidity. Now we're trading back up toward external liquidity. On the 1 week basis, we've taken external liquidity on the 1 week basis. So that means on a daily time frame, external liquidity was chosen, but we took out that weekly high. So we're still pursuing buy side. The buy program is still intact, right? Buy program is still intact. Here we go on the daily. We left this daily fair value gap. We did not trade back into it. January 8th, daily fair value gap, did not trade back down into it. Right? Had an outside day on the 11th, and then an inside day on the 12th. Took out buy side and sell side on the 11th, and then we didn't take out either on the 12th. So a lot of indecision. We just consolidating right there. Indecision. Price ain't give you nothing. If you're going to day trade, come Tuesday, trade without a bias. That's what I'm going to do. I'm trading without a bias because price ain't give me nothing. If any bias that I was to stick with, and I want to stick with a higher time frame bias of still being bullish, I do that because remember we talked about last week was like we want to see price come down into this weekly fair value gap to go and attack this right here. When we talked, I was like, come down, hey, getting calls to attack that high, right? We came down there. We still have not hit the high. All right. And we're still pushing toward it. Displacement below the January 5th low would be bearish. If we got displacement below that low, that would be bearish. Right. The way we respecting this weekly fair value gap, I do not want to see that low taken until we take that high right up here, that March high. If we fail to get that March high and then we come down here and take that low, I'm going to take that as bearish divergence to be looking for a deeper pullback. Got a daily fair value gap down here. I'm not going to mark it because it has to go down below 2 daily lows before getting to it. So I'm not going to mark that daily fair value gap. You want to keep it in mind for your own chart reference. It's the January 8th candle. It's a bullish fair value gap. It's a Bessie right there on the 4 hour. Just consolidating, nothing that I want to mark out on the 4 hour either. Right, just consolidating, then I want to mark out on the 4 hour either. Yeah. So coming into Tuesday, I'll be trading without a bias, man. I don't see nothing that like, oh, I'm just chomping at the bit for, because that was down here. You know what I'm saying? Man, when I talked about, man, have your plan. We talked about it when we was way back over here somewhere. I can't remember where we was at, but we talked about it. What is that? The 31st. Where's the 31st? Right here. So we was right there when we was right up here, right? We was right around here Friday, Monday. Yeah, right here. We was right here. I'm saying I wanted price to come back down here to go attack the high. There it is. Boom. Came down here. Now we're going toward that high, right? This was the time for taking action right here. This up here is just sitting down to see what price gonna do. You know what I'm saying? Have your strategy laid out. Execute your strategy. I have no ill will toward anybody that's out there streaming, right? But look at their videos after the market is closed. That's when the money is made. The money is made after the market closed. Don't be looking at their videos during market hours if you're trying to trade, because you need to have your plan. You need to focus on your plan. You need to execute your plan, and listening to somebody else while you're trying to trade, it will affect you. I don't care who you are. If they're going against what you're saying and you look up to them, it's going to affect you. That's why I stopped looking at ICT live streams when he was live tape reading. I stopped watching them during the day, during the market hours, because if I was looking at something one way and he was looking at it different, it affect me. It would affect me. That's why I started looking at his live streams after I was done trading for the day. Anyway, I appreciate y'all for hanging out with me. You could have been anywhere else, nowhere you wanted to be. Don't forget, in 2024, we leaving doubt. We leaving fear. We leaving being undisciplined. We leaving no game plan. Leaving all of that in the 2023.
and we taking that leap over there to financial freedom in 2024. Shout out to Gang Gang. All January we celebrating 1 year. We celebrating 1 year with the Gang Gang. If you're not part of the Gang Gang, don't feel bad, man. I still pull up on Al Gore's internet like I'm doing today and sharing my thoughts with everybody. Appreciate y'all, man. That's why I only do DR recaps. Hey, I was gonna take a DR trade the other day. Then I was like, nope, I don't trade DR. And I'm glad I didn't because it was a false positive or whatever y'all call it. I said, man, if I'd have took that trade, I would have called Robinson 3 o'clock in the morning and wouldn't start ringing it until his wife got mad and bust him in the head with a kettle pot. Hey man, I appreciate y'all. I'll see y'all on I don't know when I see y'all. Hey, gang, who pulling up? Who gonna pull up and do the tape reading? Who gonna pull it? Somebody gotta pull up and do the tape reading. Somebody gotta pull up and do the tape reading. Y'all ain't gonna leave Run out there on the island by herself. Somebody need to pull up and do tape reading. Speaking of tape reading, y'all want to do a tape reading with Timmy this week? Do y'all want to do a tape reading with Timmy this week? If y'all want to do a tape reading with Timmy this week, put a 1 in the chat. If y'all want to do a tape reading with Timmy this week. Now, if you're a day trader and you're supposed to be trading during the week, don't be putting 1 in the chat. Because I just told you, don't be looking at your favorite trader do live streams when you're supposed to be trading. Okay, I see a 1. I see a 1. -1. I ain't say Simone, you still can't get into the what's not? You ain't never figure out how to log into that account. I don't know how to do. Anybody know how to log into an account that you can't remember how to get into your you can't remember, you can't get into your YouTube. You know what I had got an email, Simone. I had got an email saying that starting in January, we would you would be able to gift memberships for a month. And I never really looked into it, but what I'll do, all right then, Robinson, I'm about to get off myself too. Tell the family I said, hey man, what I'll do, I'll look into it to see how it works and how often I can do it. And if I can do it like repeatedly, I'll just give your channel that you can get into every month. Because the one you can't get into is still it. Let me see. Is it still signed up? Because I know you couldn't get, because we was trying to figure out how to cancel it, and it wouldn't let you cancel it because you had to log into that account to cancel it. Uh-oh. I almost X'd out on y'all. I'm sorry. Let me see. What was it? I was trying to see if what was it? I don't see it. What was the what was the name it was under? Mo, what was the name it was under? Your other page you couldn't get into? I don't see it in here. I don't think I do. I don't see it in here. Let me see. Not sure. Cause I'm gonna say if Michelle, free to be me. It was your name, wasn't it? I thought it was your name. SJ. Who was E-Rock? Hey, Derek. Smiling. No, I don't see it. Sonny D. Yeah, no, I don't see it. I don't see it. I don't know. But anyway, I appreciate y'all. I'm starting to get a headache. I'm hungry. Yeah, I don't see it in there. Yeah, I don't see it in there no more. So, yeah, just let me know. Just let me know. I'm starting to get a headache. I'm hungry. I'll talk to y'all later, man. Y'all hit me up inside the what's name and let me know what day y'all put in the member section what day works best for you for the tape reading, and then we'll go with majority rules. It's gonna be the 9:30 session. Just go in there and put what day work best for you, and then we're gonna go with majority rules. Majority wins the vote, whatever day it is. All right, man. Till next time I get on, Al goes in there and share my thoughts, man. It's your boy Run Your Grundy. Y'all be safe out here in these trade streets, man. I'm gone. Yeah.